Welcome to the next episode of Blockrevision, and in today's video we'll try to cover the topic of what's going to be on the lookout for markets this week. So I will cover today the topics related to stock markets, indexes, cryptos, commodities, everything by large. So let's get into this episode. Right, so we are jumping to economy view, and right here you will find the first topic that was recently of most importance is that Senate passes Democrats' landmark tax climate drugs bill. So right here you will find that Biden agenda clears chamber after night of marathon votes, and that's the first major legislation to counter climate change in around 30 years, and it took a whopping $400 billion investment. Democrats already called the bill the largest one, such a postulate fighting climate change ever made in the US. And the things that it aims at is that they trying to expand tax credits for renewable energy projects. So it's not only in terms of the greenhouse cases, but also about the healthcare. Right now, we also have found that the legislation aims to prevent large corporations from exploiting tax breaks to pay little, if even any tax. And also, the Medicare may be from now on poised to negotiate drug prices. So right here I would say that such of market interventionism finds that definitely such expenditures won't make the inflation to tame easier. Right now, imposing more taxes imposing more taxes could tip those ventures and push them eventually into recession if that happened to accomplish in a kind of a improper manner. So implementing Medicare's new negotiating power right now, we may find it will be contentious experiment. The new policy will change the complex dynamic of investors' decisions, and except for these that are older than 65 and not have any of savings out there, there will be kind of a pain in the back when we may find that that may change a life-changing interference in the invisible hand of the market. So even on the healthcare side, whenever we are trying to intervene and make such a broad turns, it may also entail some consequences. Recently, we've also studied the case that there are many of scientists groups that are just aiming to accomplish the grants to approval for the different drugs. And with this aim, we may have found that they are even trying to reject some of them, or government is trying to reject some of the sector actions in order to just favorize those that are putting in favor of those that are, I would say, aligned with those grants. So why don't we just allow the free market to govern themselves? That's a kind of a question that Republicans have raised recently. So either it's a bad or good move right now in terms of President Biden election. That's definitely a big win, because it's one of the biggest commitments he made during his presidency. Right now, there will be also a very important point in which he may be found as a potential gainer before midterm elections in November. Let's jump further. We have found that recently, as pondering over whether we are in a recession time or not, we can find that US consumer borrowing jumps by more than 40 billion, second most over, and the truth is, with inflation at a 40-year high, Americans are having to spend more to buy the same goods and services as before. So right now, we can find that this exactly chart is something of much of a problems for US consumers, and that's the one that needs to be also analyzed by many economists. So right now, maybe the households borrowings are pointing that the consumers are still far-proved resilient. They don't find highway robberies everywhere in the shops, but that's something also that is showing us that there is a turn into more borrowing rather than buying those type of assortments. So outlays growing on inflation-adjusted basis in June, but these outlays are just growing slightly. In terms of Britain, recently that was a hot debated topic. Right now, there's forecasted a long recession UK set for even almost 2 years without any growth, and that's the one of projections that really threatens UK's market so much. Right now, the drop in recent projections would mark a pause in the recovery from the pandemic and the start of a more protracted downturn, which the Bank of England expects to last in even early 2024. So that's something that's really spokes many investors that are trying to get interested into this Great Britain's market right now. Many of them are just sitting on the sideline, but there may be right now the biggest anxiety about what the future may come to us may be just already over. So that's why there may return some of the calm on the UK's equities. So right now, these projections has made many of the government's participants, government's members, such as ruling Conservative Party, Boris Johnson, been replaced of recently, and that's something that really putting Republicans in a very hard position. Bank of England expects the depth of recession to be comparable to that of an early 1990s, but maybe a little bit milder than that which followed either the financial crisis or the lockdowns associated with the pandemic. So right now we expect the recession, but the severity might not be of such as it was back during recent downturns. So that's the news from UK. However, in terms of China, that recently been on the verge of a possible collapse in terms of property market. Right now, we can find that this crisis is nowhere near from ending, and more companies tuning to the procedure of arrangement of restructuring that in a holistic fashion this year. Right now, the debt is piling up amid crisis, and we can find that capital is ebbing, but Chinese markets may be tackling this issue, but a positive legislation and regulations may eventually should hit the market, or as we have found in the past, the less regulations for the China might be the better, not other way around. Right, so that was China. Yeah, that's exactly the one that junk dollar bond sales by Chinese firms plummet amid property crisis. And the question is, how long will the bond really last? That's from US that we have found that the inflows to blue chip funds are right now continuing to make a tide, and we can also discover. Oh, I don't have this graphic as of here right now, so I would just make a recap of what this junk bond market, why they may have been attracted by investors, is that blue chip issuance is likely to cool off after lower borrowing costs have spurred 56 billion of new bond sales this past week, double dealers projections. Right now, stronger than expected jobs report showing this there might be a more risky asset spree going on, but the question is how long it may last, and one of the projection is that flows tend to follow returns with about a month lag, particularly for funds that tend to be dominated by retail investors. So that's the one thing that may prompt us to think that bond market, US junk bond market is right now, I would say, expanding, and that should last at least a few weeks more, if not any pivotal will happen right now. If the projection of this easing of hiking interest rates projections will be maintained, the market should hang on in that manner for a bit longer. Okay, so US inflationary spike won't divert Fed rate hike plans. That's the another chart we have found. Lower energy costs to temper CPI, though a core measure seen still elevated. So change in consumer price index right now has dropped. Change in CPI minus food and energy also is dropping, but we still might not be after everything that's just here been represented. So we can find that this moderation in the overall gauge is a welcome respite, but exactly the pace of the the pace and breadth of this inflationary pressure still remains intense. Change in world oil and metals demand across global recessions right now are showing that oil may lose its valuations during recessions. However, we still need to rather take our eyesight at what's going on with copper and aluminum as they change their valuations even faster. So it means that with those valuations of different important metals are going down, we may expect CPIs to peak soon. Right here, we are just heading into market outlook, and at first, I will zoom out for a while. S&P 500 net earnings revisions index showing that we are right now getting into negativity. Negativity showing that those earnings are expected to be lowered in the weeks or months to come. However, we still on the very, very early phase of crossing this negative levels, yet as back it was in 2000 on the edge of 2006 and 7. That's where we had another move upwards before eventually recession period. So that would mean that we are still about a couple months before a possible recession, if that eventually happen and will hit the market. So that's market outlook. I would like to have a look right now also at what's going on with indexes, as it's Monday before the market openings, and yeah, we can find that natural gas is dropping, but yeah, there is expected to drop even lower. But at first, due to this energy crisis, to I would say being a good over eventually. Now we may find that also USD WTI should get lower to at least 84 bucks. So in terms of US 100, there is very important how eventually this move will end up, as we have finally formed a kind of a peak information on the very important resistance that's been formed by a trend line that right now is showing us that we are supposed to have some shaky moments ahead. So after non-farm payrolls gauges been published, we have seen a slump, but this slump has confluenced with recent resistances that have eventually turned into supports. That's why I would strictly observe this current price reaction. If we just will be able to move upwards, the recent peak built on 4th of August, there will be a very high chance we will move even higher, back to 13.5 thousands, and right after even trying to test once again 15,000. And otherwise, if we just get below the recent low, there will be a sign we will be with a high probability testing out the recent previous lows of 2nd of August. Alright, so that's the current projection for US 100, and we are getting to crypto outlook, and that's the news that shaken the market the most recently was this MicroStrategy CEO Saylor moving to chairman role, focusing on strategy and Bitcoin. So Michael Saylor was one of the biggest promoters of Bitcoin recently during previous 2 years. Right now he's stepping down and showing that he will be more obliged to take an interest into developing and companies aiming into more Bitcoin adoption. So right now MicroStrategy should turn nearly 100% into a Bitcoin industry, as Saylor is not changing direction of the company, but they are supposed to diversify the business actions. That's why we may find that they may not only make an attempt to try to enforce a spot ETFs for Bitcoin, but also return to the previous path and projections of the business. Market movers. Market mover section for today, as it's Monday. Let's have a look quickly at Trading Economics calendar, and that one showing that on Tuesday we have inflation rate from China that is expected to remain at the same level. Right after, on Wednesday, we have inflation rate from US. So that's another inflation rates from a key, from the key economics. And right now, on Thursday, we'll have PPI from US, also the gauge that's of a little bit less importance than CPI, but also giving some clue of what's going on in the economy. And on Friday, we have GDP growth rate from UK, and further we have inflation rate from France. So that's kind of an inflation CPI's week in the world, and that will be something that may give us more projections of what may happen next in the economy's world. In terms of earnings, recently, as it hasn't been, I already have spoken about earnings, but iRobot is the one company that deserves need more this Blockrevision's time right here, as iRobot has been bought by Amazon. That's why the price has changed by so much percentage, but their acquisition has been met with a lot of criticism voices, as there is another debated topic regarding the eventual surveillance fact, as with this iRobot vacuum cleaners, this intelligent vacuum cleaners been really going into households, we may find that there is a bigger chance to map the citizens' houses even further, and that's something that couldn't have made this recent robots of Amazon, and right now iRobot might be the perfect toy, I would say, robot toy for Amazon to gather some I would say fragile news about the consumers. So hopefully iRobot won't have any of that bad guidance, and that won't lead eventually to bigger surveillance issues. In terms of next week, we may find that on Monday we have Activision Blizzard already gone through, and that's the previous one, sorry. But on 8th of August we have CRISPR Therapeutics, and that one surprised to the downside. Right after we'll have in this week win results, that's the casinos business, Kronos Group. Right after we have a Turtle Beach, and sorry, that's why it haven't opened. That's Kronos Group and the Trade Desk on the 9th. On 10th we have Disney and CyberArk Software, and on 11th we have Canada Goose and ACLRX Pharmaceuticals, and on Friday we are expecting to have the earnings from Broadbridge and Fujifilm. So this week is not very strong in terms of this earnings data. I would rather watch at economics data to be of higher importance. In terms of trade idea, that's of very interesting finding is that I have for you UTC USDT. That's Ethereum Classic to Ethereum right here, and we can find that Ethereum Classic recently been that one chain that we're about to replace Ethereum, the native, or maybe not native, but this bigger chain in proof of work mining. Right now, proof of work is on Ethereum is going to be replaced by proof of stake mechanism consensus, and that's why many of the miners are trying to take the final seat at ETC. So that's why more and more mining power is getting been eventually getting been postponed and switched to ETC. So Ethereum Classic should have its good projections to the upside by the merge going to happen, and that will be at 12th of September by recent forecasts. So Ethereum Classic is that native chain that has its motto of code is low. That's why Ethereum Classic has never changed its code in order to I would say make any bailouts for their clients, unlike it was with Ethereum. Also, among biggest differences is that Ethereum's classic tokens are the tokenomics is fixed, and there is no more tokens in the circulations that it already been assigned, and Ethereum Classic supply is around 118 according to market cap. In terms of other aspects for Ethereum Classic is that right now we have circulating supply of that amount, and we are at 65% of the full supply. That the max supply will be 210 millions. So something that I said, the supply was around 118. That was back. Yeah, that's the recent projections, but something that differentiates Ethereum Classic from Ethereum is that the amount of tokens is much less right now. However, with Ethereum merge, there will be another tendency where Ethereum may even become a deflationary if demand will remain at the satisfactory level. In terms of Ethereum Classic, let's right now have a look at technicals. Right now we are just trying to get over recent very strong support right at the $39. If we manage it, and if the US major indexes will head to the north, we may find it will be a green light for Ethereum Classic to head even further. Right now, I wouldn't take any positions on Ethereum Classic if it won't happen, if we won't succeed to get over this faultish area. If we just head back lower to 36 area, there will be a very great point to short the positions, and it would mean that we are this projection is wrong. However, there is a still chance to grab some money off the table. Right now, Ethereum Classic is the one coin that is very hot debated issue among cryptocurrency space, but this move might get upwards for another leg higher, or otherwise go lower and have seen a further sell-off, even back to this merge to eventually happen. So my basic projection is that Ethereum Classic will move forward after crossing this area of faultish backs, that is psychological also barrier. But otherwise, if we just break those lows and also this 25 EMA on a logarithmic chart, that would mean, I've meant logarithmic that one, that would mean that will be a even bigger sell-off yet to happen. So Ethereum Classic normally is the one of these chains that may gain on this merge. However, we've already gained so fast, so I would rather expect exactly to watch how this price reaction will eventually turn to, then rather make any of the for-round decisions. In terms of other aspects for Ethereum Classic is that right now we are still going on with many changes to Ethereum Classic's chain. However, we need to also take into consideration that Ethereum Classic is kind of a conservative conservative structure, conservative team that is right after this blockchain. So that means there will be no very much of turns right and left, but that also stands on the that solid foundation. That means that's rock stable cryptocurrency for now. However, some of the some of the hackers attacks already been also made this chain through. But right now I do find that if the mining hash rate for Ethereum Classic will skyrocket, that would mean that Ethereum Classic is one of the most stable currencies on based on proof of work mechanism consensus right now. In terms of positions, funding rates on Ethereum Classic right now, we can find that more and more investors are positioned to the upside, but this projection is turning a little bit, and that's why we may find that there will be more difficulties with crossing $40. So just recently we've seen, however, lowering ratings for Ethereum Classic by Token Insight, but I wouldn't this time really bother about that. It hasn't been coincided with any of fundamental issues regarding Ethereum Classic. Just that was another chains possibly started to also overtaking some of the specifications of Ethereum Classic. That's why it started to losing some of its position. So more and more coins started to switch to proof of work consensus mechanism in order to take some position of Ethereum Classic. Right. So in terms of trading idea, yeah, I would strictly watch what will happen right here. There might be a top, and that might be another high of a starting of a longer correction. But right now, the next hours will be decisive, and the market opening in the US will also tell much about the future results of Ethereum Classic. If we manage to go through $40, the trade idea and trading board would set us in a position where our stop losses will get right here, and we may get to another level of $50, and that would mean risk reward ratio at 3.7 points. So that's quite of decent. All right, so that's it in today's episode. Thank you very much for watching. If you have any questions, just put it in the comment section below the video, and see you tomorrow.